All right, so we are receiving the attendees to the main meeting. Welcome. My name is Burak Baytu. We're going to wait for a few minutes because we had, a lot of demand. And as we speak, there are more people joining in. So please, let's wait a few more minutes and then we will start. Welcome again. My name is Burak Baytu. I am the founding director of Baytu Realty. I will be co-hosting this webinar with my dear colleague Alex Payani. He is a customer director of API Global. I want to just briefly touch upon why are we hosting this webinar. The main reason is the British market is receiving a lot of interest from Turkish buyers, and Turks are considered the second group of buyers in England, following the Chinese nationals. So our main goal is, to raise awareness for people who already have been considering investing in the UK, and also to the people who never thought about the Britain, but then they may be willing to, buy property. If you wish to invest to a property in London, there are, two main, construction companies. They are organizing events at the hotels frequently, and probably the social media algorithms are bringing up their ads to your screen. But there are other projects too, so we want to raise awareness about them. And among those alternatives, some of them may be appealing to your budget if you are budget sensitive and looking for more cost effective investments. Because some people think that Britain is beyond their budget, but it may not be always the case. Without any further ado, I want to give the floor to my beloved colleague, Alex.
Thank you, Burak, for that very kind and informative introduction. So, welcome to everyone who has taken the time to join us for today's webinar, The Intelligent Way to Invest in London, Prime Growth, Sensible Pricing, and Real Returns. But before we get into the finer details of the webinar, please allow me to give some background on who API Global is. So, API Global as a business was founded in 2013 with a clear goal in mind: to provide international investors with seamless access to the UK property market. For us, investing in real estate should be as straightforward as trading stocks, a hands-off, hassle-free experience, just as you hit buy on a trading platform and watch your portfolio grow. UK property works in the same way, with the added benefit of receiving monthly rental income, effectively your real estate dividends. Our approach at API Global is built around supporting investors at every stage of their property journey. Whether you're purchasing your first property or your 10th property, we're here to guide, advise, and ensure each decision aligns with your long-term goals. Now, when we look at how API Global works alongside Burak and his team, there is a tried and tested process which has been refined over the last 13 years to ensure every project we put in front of investors generates the expected return on investment. Now, I will walk you through our 10-step process here, starting with point one. This focuses on our team who are based in the UK. This is where our research and investment strategy helps identify the UK's next growth corridors. It's essentially the job of the team in London to go and identify areas of growth, both from an investment, but also a developer standpoint. And what I mean by this is that we don't target areas in the UK simply to expand our footprint. We focus on cities like London, where we see real value driven by population growth, infrastructure investment, and long-term capital appreciation. So ultimately, API Global operates as a market research firm first, ensuring that the locations and developments we bring to market are backed by data and real demand. Okay, excuse me. Point two is all about the security and the due diligence that we conduct to ensure that projects that we're bringing to investors, they stack up financially. Okay. Our aim is to de-risk investments from the outset whilst ensuring contracts, pricing, timelines are completely watertight. And then every project that we launch is subject to a 120 point due diligence checklist, which is then signed off by an external legal partner before it reaches the market. Okay. Point three is where we work alongside Burak and his team to support in presenting investment opportunities to you as potential clients. What is important here is that we ensure you as investors are receiving advice tailored to your objectives, whether that's income, capital growth, or diversification between the two. When I move to points 4 and 8, this highlights for me the importance of the back office team we have at API Global. So at API Global, we have our sales progression teams based across the Middle East and the UK. The sales progression team's job is to ultimately guide you as clients through every step of the way and can include introductions to solicitors, ensuring that amongst many things, the contracts stack up. If you as a client are investing in off plan and you invest, let's say, £50,000, you do not want to be investing £50,000 and hearing no news for the whole construction period. So with that in mind, every quarter we provide construction updates so you as an investor are kept updated with the build progression of your investment. Okay. Excuse me. Point 7 is our mortgage support. So at API Global, we have an in-house mortgage brokerage which can access up to a number of different lenders. So there's no one size fits all approach when it comes to financing. Typically 6 months before a project completes, our mortgage team will be in contact with you as an investor to touch base as the process begins. Once the mortgage is approved and in place, along with deposits paid and contracts signed, the sales support team will work with you to ensure everything is complete on time. Okay. Points 9 and 10 are both post completion. So our property management arm, who are called Redstone, they provide that fully managed service from sourcing tenants, doing tenant checks, managing the tenants, collecting rent payments, so on and so forth. So you as an investor based in Turkey are not having to deal with potential hassle of the tenants. We have Redstone in place to ensure that they're putting the right tenants inside your investment. Okay. And then point 10 for me is where API Global truly stands apart. We approach property investment with the same care as a financial advisor would. Through our portfolio optimization tool, we assess existing assets and explore future strategies to help you as clients maximize your returns. It's about looking beyond the initial purchase to unlock that long-term value. So as you can see, with our 10-step process, it ensures that every stage of the investment journey is handled with care, transparency, and expertise, giving you as an investor confidence from the first conversation to the exit strategy. Okay. Now, so far, working with Burak and his team, we've often spoke about opportunities outside of London, sometimes even against what Turkish investors traditionally look for. The reality is, Turkish investors have always wanted London. That hasn't changed. What has changed is how you invest in London. At API Global, we're not interested in the hype zones, the headlines, the emotional decisions. We're interested in those pockets of growth, areas driven by connectivity, regeneration, and genuine demand. In London, zones are often misunderstood. It's not about zone 1 versus zone 5. It's about how well connected a location is. 2 stops can matter more than 2 zones. London also is a city where you do not lose money. But if you want to build a successful portfolio, you must ignore the noise and focus on strategy. That's why API Global, along with Burak, we're not about big flashy launches or showy events. We focus on identifying the right assets in the right locations at the right time. This brings me nicely onto the first development that I would like to highlight on this webinar. Here I'm introducing the Moxon, brought to you by Tremela Developers, a new premium residential development in High Barnet, North London. This is a... Yes, Burak.
But
of course.
At this point, can I just also share my approach to this and why we're actually working with API,
Of
uh,
course.
because I think it's important.
Do you want me to go back to a slide or shall I stay on this slide?
No, that's fine. That's fine.
Okay, okay.
Let me continue in Turkish and add a few comments from my end. Baytu Realty was founded in 2018, and it wasn't just to make a difference, just for the sake of being different. But the idea is people are investing in the UK, and we wanted them to make the right investment with the right price point and to get the maximum ROI. I am a certified interpreter in the UK. I have a translation background, and I have seen many times that a lot of fine print was not translated accurately to Turkish. And I know Turkish investors love London. I mean, everybody loves London. But I know that a lot of Turkish investors know nothing about outside London. So I decided that Turkish people need data-driven advisory services for London and for the rest of the UK. So of course, I'm a salesperson. We are a sales company, but our approach is to do the right service to give accurate data for potential investors so that they will be properly guided during their investment journey because we are committed to offering proper data and building trust. That is our motto, or that's our philosophy, so as to say. And as you have just seen, Alex summarize that we are not just offering you just a property from a hype project and from the UK, but we have data and we know that you will get the maximum return investment from these. Of course, I mean markets are volatile. Things may change, but with the current data in hand, this is what we believe we can confidently offer to Turkish investors. With uh, Baytu Realty and API Global are very much aligned in their company values and sales philosophies. So we joined our forces and offering the Turkish market. So Alex will be introducing several projects to you. If you have already made your research in the UK, you may have seen that. But if you haven't done yet, uh, you will see that there will be substantial price differences compared to some other companies selling the Turkish market. So paying less will give you an immediate advantage. These properties are available in London, but then there are some branded projects that are hype projects and they create the noise. And in that noise, sometimes these investment opportunities may get lost. So API Global and Byte Realty is here to introduce you these opportunities. Alex, over to you.
Thank you, Burak. I appreciate that. And yes, let me get back into the first of the two developments that I will share tonight. So, as mentioned, here I'm introducing you to a new development that we've launched recently in London called the Moxon by Tremela Developers, which is in a new premium residential development area in High Barnet, North London. This is what we see to be as a boutique scheme that combines a lot of green living with direct access into central London, which appeals strongly to higher income families and professionals, we believe. It offers an excellent balance of lifestyle, connectivity, and investment fundamentals. And most importantly, it's priced competitively for the London market right now. The development has a total of 113 units, which is mixed across one bedroom, two bedroom, two-bed duplexes and three bedrooms, with pricing currently starting based on availability at £379,000. In terms of the sizes of these units, they are seen to be much larger than your London averages. As you can see, the square footage, the range of them is listed beneath each of the inventory options. Completion is April 2028, so we still have just over 2 years of the build. So now's a great time to get into the investment and take advantage of that capital appreciation during the build phase. Gross yield is estimated at 6%. A lease of 250 years with zero ground rent, so no liability there. The service charge extremely competitive at £2.56 per square foot, especially when you consider there's a rooftop terrace, a gymnasium, and a residence lobby. Okay. Now, every development that we work with Burak on, the fundamentals underlying the strength of the investment case are always the same. We always look at connectivity, we always look at student retention, we always look at corporate behaviours. Where are businesses setting up or growing their presence across the UK? Now, for the Moxon, one of the biggest advantages is the connectivity. You are about 100 metres from Barnet High Street. So the cafes, the restaurants, the gymnasiums, the everyday convenience you don't necessarily get in zone 1 are literally on your doorstep. High Barnet tube station is just a short walk on the Northern Line, giving you direct access into the heart of London. It also happens to be the first stop as well. You're into King's Cross, Oxford Circus, anywhere between 25 to 30 minutes. Also 25 to 30 minutes into the city and Canary Wharf via Bank, making it perfect for working professionals. You've also got great road access. The A1 and the M25 are close by, so you can reach Heathrow Airport in just over an hour. Plus, you're less than a kilometre from Barnet Hospital, with over 23,000 NHS staff supporting strong local employment and rental demand. Now, this slide gives you a bird's eye perspective of the neighbourhood and what surrounds the development, the Moxon. The development, as you can see, sits in the bottom right, and the view that you're seeing is the outlook from the rooftop terrace. Okay, so a fantastic view here. You can immediately see how established and how green the area is. Right next door to the Moxon, you've got Jaguar Land Rover, which is one of the UK's largest employers in the automotive sector. That contributes to strong professional rental demand in the area. You've also got Barnet and Southgate College, the Windmill School, and several high-performing primary and secondary schools within walking distance, which makes the larger 2-beds and 3-bedroom apartments especially attractive for families who want to live in a stable, safe, and community-led environment. Just under a mile away is Barnet Hospital, one of the largest NHS employees in North London, which again supports steady long-term rental demand. And then a telling detail for me is you've got a Waitrose, which is a supermarket for those who aren't aware, just a few minutes away. You generally only see a Waitrose supermarket where you have a more affluent resident base, which aligns perfectly with the tenant profile we're targeting. Households earning more than, let's say, £100,000, often dual income professionals who prioritise lifestyle, education, and convenience. One of the biggest advantages for investors in the Moxon is the payment plan. The purchase is spread over 10% at exchange and another 10% 12 months later, with the remaining 80% only due on completion in 2028, where you can mortgage a significant amount of that 80%. So effectively, you as an investor are controlling a London asset with a very small amount of capital deployed upfront. Now, why is this important? If an investor puts 10% down today and the property value increases by just 5% over the next 12 months, you've effectively generated a 50% return on capital. So with Barnet sitting in the middle of multiple ongoing regeneration zones, combined with extremely tight supply and strong demand from high income families, a 5% uplift in the first year is not unrealistic. In fact, in many cases, it can be seen as conservative. But before I move on to Claremont Quarter, was there any comments you wanted to make on the Moxon, or shall I move through to the next developments?
No, I don't have much comments to add, but maybe just one. This is, this project will be delivered 2 years from now. It is not a high rise because in England, a lot of high rises are stuck and constructions have been delayed. But this project will not be impacted by the high rise, situation. So by the end of 2028, we are hoping that I mean, all units will be delivered. That is my 2 cents of comments. That's all. Thank you.
Thank you very much, Burak. Now, moving on to the next development, and this is actually an area, Burak, I believe you've lived in yourself. So I'd love to hear your comments whilst I've walked through this project. Claremont Quarter is located on Claremont Road in Cricklewood, which is also in North London. It's just 500 metres from Cricklewood Station, which makes it an extremely convenient option for commuters heading into Zone 1 and beyond. The development offers a total of 251 modern apartments across 3 low-rise blocks with a mix of 1, 2 and 3 bedroom units, and every apartment comes with its own private outdoor space. For us, and Burak will align with this sentiment, but one of the standout features of this development is its position within the £8 billion Brent Cross regeneration zone, which is one of the largest regenerations currently taking place in Europe. This brings in massive infrastructure upgrades, new public spaces, and a whole new ecosystem of retail, commercial, and residential activity. From a pricing perspective, we have got 1 bedroom starting at 439,995. We've got 2 bedrooms starting at 534,995, and 3 bedrooms actually starting at 619,995. Okay? That makes this one of the most competitively priced Zone 3 schemes in London today, especially when you consider the regeneration upside and direct transport into central London. Claremont Quarter is being developed by a developer called Chase New Homes, a respected UK house builder known for focusing not only on investment grade property, but very much with the end user in mind. The development is in an NW2 postcode, so right in the heart of this rapidly transforming Zone 3 location. As mentioned, the development has a total of 251 units across multiple phases. Block 1 is scheduled to complete between Q4 2026 and Q1 2027, so give or take 12 months. Block 3 is scheduled to complete between Q4 2027 and Q1 2028, so give or take 24 months. From an investment perspective, gross yields are expected around 5.5%, which is strong for Zone 3, especially in an area undergoing major regeneration. The lease length is 999 years, so it's virtually a freehold asset. Ground rent is 0, so again, removing any long-term liability. And service charges, again, extremely reasonable for London. Block 1, £3.31 per square foot. Block 2, £2.88 per square foot. Now, this slide is a really important one because it validates why we believe and why Burak believes Claremont Quarter to be such a strong investment case. So Claremont Quarter was in fact the most sold development in London across Q3 and Q4 in 2025, and we've seen the momentum continue in the new year. This is according to Mollier, which is one of the most respected independent residential research firms in the UK. And this wasn't by accident, and it wasn't driven by hype. What resonated with a lot of the buyers we've worked with, and particularly with international investors, Claremont Quarter ticked the fundamentals that actually matter in London. Firstly, location and connectivity, which I'll come on to in the next slide. This is a well-connected London neighbourhood with strong transport links that put residents quickly into key employment and lifestyle hubs. As we always say in London, it's not about the zone number, it's about how easy it is to get in and get out. Secondly, pricing. Claremont Quarter was positioned at a level where buyers felt they were buying value, not paying premium for a postcode. And that's why it appeals so strongly to investors who understand long-term capital growth. And third, end user demand. This is not a speculative product. It's a development designed for real people who want to live there, which is exactly what you want as an investor, because it underpins rental demand and long-term price stability. And finally, timing. In Q3 and Q4 of 2025, buyers were far more rational. They were no longer chasing hype or big, shiny, flashy launches. They were looking for solid, well-located assets that made sense financially. Claremont Quarter matches that mindset perfectly. And that's why it's sold so well. And that's exactly the type of opportunity API Global, we focus on developments that resonate with the market because they're fundamentally strong, not because they're loud and trying to make a lot of noise. Okay. Like the Moxon, one of the biggest strengths of Claremont Quarter is the connectivity on offer. So as I previously mentioned, the development is located just 500 meters from Cricklewood Station, and it's on the Thames Link line, which is one of the most reliable and direct commuter routes into central London. From Cricklewood Station, you can reach King's Cross St Pancras and Euston in under 15 minutes. Farringdon, Blackfriars and London Bridge are all within 20 to 25 minutes, and direct links to major universities, UCL, King's College, Imperial, all within 15 to 30 minutes. So with Claremont Quarter, you're getting zone 3 pricing with zone 1 connectivity. And this makes it extremely appealing to professional tenants, to students and owner occupiers alike. The level of accessibility gives strong appeal to also international investors, relocating professionals and frequent flyers. Okay. This for me, and as I alluded to at the start of presenting Claremont Quarter, is probably the most exciting aspect of the investment case. So Claremont Quarter is located right on the edge of the £8 billion Brent Cross regeneration zone, which is one of the largest urban redevelopment projects in Europe. And let's break down what you're looking at here, okay? On the left-hand side, you'll see purple, blue, and yellow shaded areas. This represents the scale of the regeneration taking place. It spans residential, it spans commercial, retail, leisure, student housing, later living, green spaces, and more. And Claremont Quarter, as you can see, is marked clearly here, just on the right-hand side, on the map, and you can see how it sits just outside that core regeneration zone, giving buyers all the upside without paying a regeneration premium yet. One of the most critical additions is the Brent Cross West Station, shown just above Claremont Quarter. Let's delve deeper into the Brent Cross regen and exactly what is being delivered. As mentioned, it's over £8 billion in total investment, a new 180-acre master plan neighbourhood, 50 plus acres of green spaces and park, 6,700 new homes being built, a completely redefined town centre with new shops, cafes and restaurants, a new satellite university campus from Sheffield Hallam University, and over 3 million square foot of office space attracting global companies and jobs, and a focus on sustainability, well-being and net zero development by 2030. So ticking all the boxes. And again, like the Moxon, Claremont Quarter has an extremely strong payment plan. And this is a reason why investors are comfortable with this opportunity. It starts with a £5,000 reservation fee, which allows you to secure a unit without committing significant capital up front. On exchange, the commitment is 10%, which is competitive for London, and importantly, is not a front-loaded equity. There is then just a 5% payable 6 months later, which spreads that capital deployment and avoids pressure on cash flow. The key point is that 85% is only during completion. This keeps the majority of your capital liquid while the asset is being built. For international investors such as yourself, this creates flexibility, whether that's planning mortgage finance, managing currency exposure, or allocating capital across multiple assets. At API Global, alongside with Budak, we're actively looking for payment plans like this because it reduces risk, preserves liquidity, and aligns capital deployment with real progress, not speculation. In today's market, this type of structure is increasingly rare, which is why we see it as a genuinely competitive payment plan. Budak, I'll allow you to come in now because I know you're very familiar with the area of Cricklewood. And then when you finish, we can then move on to some questions that you may have already had sent your way. And I know there's a few pre-populated questions as well that you wanted to ask me.
Well, let me add my comments. For Claremont Quarter, Alex is right. I've been living in England since 2003, and it's been like 22 years, and 20 years of my life has been in northern London, and like 5 or 6 years I've been living very close to this development. I know this neighborhood, and there's a serious regeneration project, and where I lived is just 5 minutes walk to this project, and I could easily access to the train station, and there are supermarkets everywhere, and this is where the urban regeneration starts. This is the closest part of the Brent Cross project to central London. Alex also mentioned, zone is not a property investment decision. Zone, don't stuck on zone. Think about connectivity. I mean, just like Istanbul, there are circles expanding from the central city, and one edge of that circle may be in Beşiktaş, which is central London, but the other end of that circle could be Maslak. So for us, the realtors, we don't really think about zones. However, a lot of projects are marketed with zones. So for us, we consider connectivity. Like if you live here in like only 15 to 20 minutes, there is Jubilee line here, and then you will be on second zone. But if you use the train station just on the corner of the project, that station is considered zone 3. So this project has 3 stations on 3 different corners, but one of them is on zone 3, the other one is on zone 2. So it doesn't make any sense to think with zones. This project is now going through a substantial regeneration. When I lived there, it wasn't like that. So if you want to live here, or if your kids will study in London, this is a very good choice for you. And Chase New Homes, as Alex said, they are a reputable developer. They both appeal to the investors and also to end users. London and the UK property market attracts a lot of investors because property prices are constantly increasing. There is no scarcity of tenants. It's a very rare chance that a house stays empty. So it's really tempting for investors. But offering a balanced project is important because if you only appeal to investors, which we are seeing in the market, and I know some of the people here are among our investors, and we experience with them too. Sometimes when you invest in a hype project and the rental income may not really match the investment value. But then if you have a balanced development, like both investors and end users, then the rental income will be more balanced. And also there's another very nice development idea. This project is built in phases. That means the investors will not experience any rental bottlenecks because there won't be hundreds of apartments in the market all of a sudden. And then the service fees. The service fees in England are paid by the property owners. In Turkey, the tenants pay the service fee. This is different in Turkey, I know. And a lot of investors have different reasons. Like they say, okay, I want a movie theater, I want a pool, I want a golf simulation field. But if you pay for fancy things, you will pay the service fee, but your tenant will enjoy. So if you are not going to live there, I wouldn't pay for the fancy stuff. I'm not telling you that don't buy a fancy apartment, but just remember that as the owner, you will be responsible for paying the service fee. That's all I want to say. And for the Claremont Quarter, the service fees are very reasonable. Because there aren't any fancy stuff in this project. Let's be just. People use the gym mostly, the gymnasium, but you don't really use any of the other things. Maybe once or twice a year, but then you have to pay for it because you own the property. And just very close to this project, there's a new gym and a very nice place, and now it is being renovated. So instead of buying from a fancy property, if you really want to go to the gym, there is a gym nearby. And for the youth, for the young generation, it's a very convenient place. It is a neighborhood. It's very well connected. And when you are flying to Turkey, you take the first train from the train station on the corner, like you will carry your luggages maximum 500 meters, and then the train will take you to the airport. So, that's very convenient. In the meantime, I see there are questions coming to the Q&A box, and at the end of the platform of the presentation, we will respond to your questions. Alex, over to you. Do you want to add any further comments, Alex, before I proceed with the questions?
I think you've really hit the nail on the head, to be honest. But like I said, obviously, when you and I decide on which projects we feel comfortable working together on, there's a lot of due diligence that goes into it, to the extent of you spending time in London and you going to meet with the developers and look at the surrounding areas. So I think the fact that you personally have the confidence in the Moxon and the Claremont Quarter, it speaks volumes to then present these opportunities to your clients that are joining us today. So there's not a lot more I can add, to be honest, because I feel like we've covered both developments in a lot of detail. Hopefully on the back of today's webinar, we'll get the chance to sort of have some one-on-one conversations with some of the guys that have joined us today, where we can sort of really delve into a lot more detail on both options, but also understand, what exactly are people looking for when they're looking at London as a market. Because as we may come on some of the questions, you really need to sort of, I guess, analyze and compare options that are put in front of you. And for us, we get developers and developments thrown our way on a daily basis, and we didn't feel comfortable taking any more in addition to Claremont Quarter and the Moxon, because they just tick all those macroeconomic fundamentals which are so important for us to have the success. And Claremont Quarter illustrates that by being the most sold development in London across Q3 and Q4, which is a phenomenal achievement. And as you've seen Burak firsthand, the momentum is continuing into the new year. So that's all I'll add for now. I know obviously you may have some questions you wanted to ask me, or there may have been some questions that have come in from the audience that hopefully I'll be in a position to answer and add some knowledge.
Exactly, Alex. We will move on with the questions, but let me add just one more comment. The momentum that you mentioned in that region is because other Turkish investors are also keen in investing to the Claremont Quarter neighborhood. Well, of course, there are a lot of projects in the UK, but then, we don't have to sell all of them. But then I think we can make a bold statement that our due diligence, our analysis is solid.
Mm.
It just checks all the investment criteria.
Correct.
And I believe, the projects, some of the projects we introduce in the past and today, our investors were surprised. Really, they said. But then it was a pleasant surprise for them, because they are very happy with the return on investment. Feel free to put your questions in the Q&A box. I can see the questions. The first question is, could you please provide an overview of the key differences between leasehold and freehold properties? Let me take this question. Not only as a realtor, but also as a translator. But leasehold is not a concept that Turks assume. Leasehold are usually for 250 years for new projects, and there's a countdown. Let's hope that we live for 250 years. but the Turkish people always ask, am I going to be a tenant because it says leasehold? Will the UK government take this property away? And ChatGPT, interestingly, misleads people in Turkish. Lease translated to Turkish as rental. And people think that because of this translation error, people think that it is a rental property. No, it's not a rent. You're not renting, you're buying the property. From a freehold, the leasehold does not depend on the soil. Like when you look at the title deed, if you compare this with a Turkish title deed, I mean, your rights and your privileges are exactly the same, but you don't own the soil, the ground where the property is built. But investors say, okay, but I want freehold, which means I also want the soil, the ground. But it feels like, I mean, I am buying a car from a car dealer, but you want to own the road with that. I mean, it doesn't exist. In England, leaseholds are generic titles for apartment buildings. Freeholds are entitled to homes, like you have a home and you build a house or an estate or a villa on the top of it, then you have freehold. But all the others, you have a leasehold. Everybody asks what's going to happen 250 years later, but that 250 years never ends. It is constantly extended. But this Claremont is for 999 years, which is practically a freehold, a virtual freehold, 999 years. In England, they call it a virtual freehold. And the primary reason why freehold does not exist in central, locations, because freehold also includes some responsibilities for the property. In England, there are block management companies, and they are in charge of those responsibilities. Like if you have a freehold, like if there is any problem on the roof, or if there is anything on the ground, you have to manage it yourself. And if you don't live in England, that will be a real headache. But when you have a leasehold property, you pay your service fee and everything will be taken care of. Your service fees will be like, transferring this responsibility to the block management company. Alex, do you want to comment on this leasehold, freehold situation?
I think you've covered every single element of it, to be honest, Budak. So I don't know if I can add any more color or clarity, but yeah, I think it's a concept that's sometimes overthought, let's say, and I wouldn't get too caught up in the whole freehold versus leasehold debacle unless you can somehow magically live more than 250 years, which if you can, that's quite impressive in itself. So, Budak, no, you've covered everything from start to finish there.
Well, thanks, Alex. There's a question about zones, but I believe we already explained that. I mean, zone 1, zone 5. Don't be obsessed with that. Because, I mean, your payment reflects the conveniences that you are investing in. And I mean, I lived in England for 20 years, and nobody in London, really, you know, thinks about it. I mean, and living in Zone 1 is like living in the most touristic places of London. Okay, you can walk everywhere, but do you but do you really want to walk with all those foreigners? But also in those touristic areas, after 7, 8, there's nothing.
Yeah.
No stores, no nothing. And because when the tourists and businesses are closed, there is no charm of the zone 1, in my opinion. And the projects we introduced to you today are located in zone 2 and zone 3, depending on which train you are taking. But for example, on zone 6, we have Equinox project. It's just next to the metro station. That's the last stop of the train. And in 20 minutes with Piccadilly line, you reach into King's Cross in 20 minutes. That is zone 6, but it takes only 20 minutes to reach King's Cross. And from our projects, it takes 15 minutes. So I think connectivity is far more a better criteria when you are investing. Let me check other questions then. This is a very critical question. And for the and we have a little surprise, and it's a question about mortgages in England. Can I get mortgage in England as a foreigner? Alex, do you want to talk about mortgage options for foreigners in England?
Of course, yeah. So, look, absolutely. Yes, non-UK residents, including Turkish citizens, can obtain a mortgage on UK property. I guess it's one of the reasons international investors choose the UK market, because the financing landscape here is so transparent and accessible. That said, the process is a bit different compared to buying with cash. So lenders assess non-resident applicants on criteria such as income stability, credit history, and proof of funds, and typically offer between 60 to 75% loan to value for overseas buyers, depending on the profile and the lender. I would say the lender we work most frequently with when it comes to supporting Turkish investors is a lender called Nomo. Nomo are a very strong mortgage outfit who have supported a lot of our investors with a number of mortgages now. So it might be worth looking into a bit more about those guys and the various terms and options that they have. But I guess what's important to stress is that it's not closed off for non-residents. And what I mean by that is that there's multiple UK lenders who specialize in non-UK resident mortgages, as I've just mentioned with someone such as Nomo. So some will even consider foreign income or assets in the assessment of the documentation, ensuring that the criteria stacks up. And as I've alluded to earlier, at API Global, we have an in-house mortgage brokerage. So even if you wanted to just have sort of a consultation call and pick their brain and ask a few questions before committing to an investment, we sometimes kind of support that and advocate that that's probably a good decision to make, just so you feel confident in the potential financing options that may be available for you 6 months prior to a project completing. I think also a key point to remember with financing is timing. You know, lenders typically like to start the mortgage process closer to completion. So once the paperwork, the deposits, the exchange is in place, that's very much normal practice in the UK. So yeah, look, we work with predominantly non-UK resident investors, whether it's across the Middle East, Asia, Africa, the Americas, and we have supported every single nationality and profile, subject to those boxes stacking up that I mentioned, getting them financing options. So yes, no issues. We've got the in-house team to support. You may already have a mortgage contact that you use. So, of course, always ask them for support as and when needed. I know Burak has got relationships as well there. But yeah, it's one of our specialities and it's part of the full process. Burak, you may want to add a bit more color to that.
Yes, thank you. Evet.
Well, talking about mortgage, I mean, I don't want to sound argumentative, but if you think that you will need a mortgage when you are investing in the UK, I must say that for the last 2, 3 years, the financial outlook of Turkish Republic has deteriorated, and Turkey is now considered as a low risk or mid risk country. I mean, on the brochures, it says, 70, 60%, loan to, property value. Technically, they are accessible, technically. But in the last 2, 3 years, I've seen with some of my clients that we had difficulties in accessing to finance. I mean, if your budget is very tight, and then if you were counting on a potential mortgage, you may not reach 30 to 70. Technically, it is possible. But if you want to be on the safe side, make your budget for a 50-50% loan ratio, even 40-60%. I mean, imagine you are paying 40% of the property value and 60% comes from a lender. So consider that you will be paying more from your pocket upfront. on the completion, and the rest will come from the lenders. But if we can secure a better loan, then you will be on the bright side. But let's be more conservative given the current circumstances. And, in these properties, there is no, tenant problem. Because if you have a tenant problem, then the lenders will not really be, eager to borrow your money. And the lenders, they may advertise 75%, but they may undervalue your investment. Like they may say, okay, this is not a 500,000 pound property, but they may show it as a 400,000 pound property, and they may pay you 75% of it, but it is much less than the actual value. So in the end, you end up paying 50% of the property value. So just assume that, but if the lenders do not foresee, a regular rental income, they won't borrow you money. For example, if your monthly mortgage payment is £1,000, the lender will expect £1,250 of rental income per month. If they don't forecast this rental income, then they may not be keen on borrowing you like 75%. Because at the end of the day, the lenders are private entities. They exist for profit. So they make their calculations based on location, based on your credibility, based on your payment terms. And I must underline, I mean, now I'm talking about a lot of mathematics, maybe, too much maths and too much numbers. But moving on with the example I said, if your rental income is like £1,400 a month and you pay 1,000 to the bank, and then you have £400 every month, that's your monthly income. But consider the next 5 years. This value will appreciate significantly in pounds. So you will get the full value of it. And you will be paying 40% or 50% of the total value of the property. And in the next 5 years, if this property will appreciate another 20%, that means your profit is not 20%, but your net profit is 40%. So using mortgage and investing for a rental income makes sense from an investor point of view. I did the maths for you. I hope you could follow. The next question is, I believe we answered all the questions, but if we want to sell the property, how easy it is to exit if we want to sell it? This may be the last question now. And then for mortgages, we will have a mortgage offer to the attendees of the webinar. Alex, can a non-resident, sell their property in the UK? How easy it is to sell?
Yeah, the process is relatively straightforward. A lot of the investors who are looking to exit a portfolio, either that we've supported them on or they've bought prior to working with API Global, they can use Redstone. So Redstone, who I referred to earlier, is our lettings and management arm. Now, Redstone partner with a company who are called Countrywide. For those who don't know, Countrywide are one of, if not the largest network of real estate agents in the UK. So a lot of our investors who are looking to exit and sell, for whatever reason that may be, are using Redstone, and Redstone and Countrywide will therefore then take over and offer the product to local markets and will typically be successful in selling that property to local market. So we have the process in place. We've not seen any hiccups to date with a number of our projects. So yeah, we try and keep the process pretty seamless, pretty straightforward. So again, your involvement can be as minimal as you would like it to be.
So I said we will talk about mortgages and a quick surprise, but there is another question about mortgages. I don't see the name, but let me give a quick answer. And if you contact us after the presentation, we can give you a more precise answer for your investment case. The tenure, the duration of the mortgage, how long it depends on your mortgage, and the interest rates also depend. For the non-residents, the mortgage is like 5% annually. I mean, Alex knows better how much the lenders supply. Like for annual interest is like 5%. It may be less, but I think the typical rate is 5%. But that's not really important. I mean, you should think I mean, at the end of the day, I mean, you buy a property and you're not just investing for the monthly return, but your real investment is for the appreciation of the property. So if you invest £500,000, if the value increases by £75,000, I mean, you can do it by spending £500,000 from your pocket, or you use a loan. In one of the options, your total revenue is like 15%, but for the other option is you invest 200,000 pounds, but then you still earn £75,000. So it's like 30% return on investment. So, but you invest less, but then you get more. So if you have money, instead of buying one property, you may buy multiple units and apply for a mortgage. That also makes sense. As I said, for any additional questions, feel free to get back to us. Baytu Realty social media account and our website is available. You can also use our WhatsApp number. I think I can use our chat. I mean, Serhat Bey, can you post my contact details in the chat, please? So this is our WhatsApp number. And before we close, for the next 2 weeks, if you decide on an investment and if you pay a deposit, Baytu Realty will pay the service fees and mortgage application fees. So we will pay your application fees if you decide to invest in the next 2 weeks. Alex, thank you very much. I also want to thank our interpreter, Ümit, and our support person, Serhat. Thanks very much for joining, and I hope you enjoyed the presentation. Stay in touch, stay connected. Please follow us on social media because we bring you data-driven investment opportunities in the UK. We are committed to offering you the right locations and the right prices for Turkish investors. Thank you.
Thank you very much.